So the next step is the mortgage loan application. This is the nitty-gritty of everything, okay? This is where dates and deadlines are really critical. You've got your accepted offer now. You're going to have your documents in order. It's time for those to be brought in to us because we're going to need to make copies of those, or you can scan them and send them to us, whatever way you're comfortable with.
And then we're going to send out what we call disclosures to you. By law, the federal government gives us a laundry list of things that we have to legally tell you about, which is disclosing to you, and we have to have you sign off stating that you have in fact received those. A lot of them are that we're not going to discriminate against you. Within there, that you're stating, if you're stating that it's an owner-occupied house, that you're actually going to move into it, or if it's an investment property, that you're disclosing that to us as well. Again, honesty is the best policy.
Right.
Those disclosures will include the loan estimate, which scares a lot of people because it looks like big scary numbers.
Right.
But with those, we always over disclose.
That's right. Yeah, we overestimate. This seems to be the piece that almost everybody is mostly interested in. They can't wait to get their loan estimate. It has all the numbers on there, like the escrows, your principal and interest payments. It has on there the appraisal costs, all different kinds of things like that.
We're bound by this, and we as lenders are bound by this.
That's right.
You're not bound by this. This is where you're checking and cross-checking things. And what we do is we overestimate things because federal government says that if a bill comes in and it's more than what we've estimated, a bill coming from a title company or from an outside vendor, if it's more than what we've estimated to you, we're tied to that estimate.
Absolutely.
However, when we're putting all of the final numbers together, we're tied to whatever the vendor's bill is. So hypothetically, let's say that we disclose $50 for a credit report, but yet the credit reporting agency charges us $41. We're only allowed to charge you that $41. So even though it's overestimated, we're bound by the bills that come in during the process of processing your loan.
That's right. And on the opposite side, if something comes in, if let's say an appraisal, we've estimated $400 for an appraisal and it comes back at $550, we can only charge you that, that $400. We're not allowed to charge you later. So what's in this loan estimate is as high as it possibly can be. Okay, we're not going to go any higher than any of those numbers. And I think, so don't be afraid when you receive that, or if your client receives that and starts asking you questions, don't be afraid of that. Go ahead and sign that because everything needs to be in a timely manner. We need to get this stuff moving along so we can order appraisals and get things going, okay? Any questions regarding that segment?
If you have a question or if you'd like to see the full presentation, please feel free to contact Peggy at 920-457-5626 or email her at peggy.ayers@cibmmortgage.com.